Yo, what's up you guys? Welcome back to a new video. And in today's video I want to give you guys an update on the market. I also want to dissect the comments Powell made yesterday when he came out and testified, as you can see right over here. Now if you are new here, a sub would be appreciated, as I provide valuable educational content on a daily basis. And if you do enjoy the content, please do consider smashing that thumbs up button there as well. Now yesterday Powell came out, testified. I'm not sure if he's testified because testifying means telling the truth, but you know how it goes in the markets. But one thing that was not surprising to me, right? A lot of people went out there and said, you know what, why did gold behave? Why did the stock market dump? And it was like, I knew it was going to fall, but nobody could tell you exactly why that is. Now today, I'm here to explain to you exactly why. Number one, if you look at the Nasdaq, right? So I'm here to explain to you exactly why you saw this massive dump that took place here, and SMC trade is gonna go, yeah, it has to fill in the imbalance. Yeah, it's fine, like you can say that also, but I'm here to explain to you exactly why this dump took place. Now a lot of people's gonna argue, well, it's how price action works, and but that's how technicals fall into fundamental data. Now this entire drop was driven through fundamental information, whether you like it, whether I like it, but that's how the market goes. The market doesn't behave of your trades and my trades and that guy. No, it behaves of data, accurate data. Investors buy the dollar because of data, of what Powell said yesterday, not because you have a 0.01 pending order there and I go like, guys, my friend, he's got a 0.01, please let's drive the price up so we can help him convert that into 100 rand so he can take a screenshot and use it for marketing. That's not what we are here to discuss, but we know Powell came out yesterday. Powell's going to come out today again. We've got a jobs report coming through on Friday. Now, I'm going to explain to you how this all works out, how you can benefit from it if you have not benefited from it as of yet, and what we could potentially expect from the job report on Friday there as well. Now, before we get started, it's important to understand that how the market works, right? So we know that the last CPI report that we received, right, was higher than anticipated after a drop in the CPI data. Now, if you are new here, a CPI is the Consumer Spending Index, which measures what consumers spends on a baskets of goods and services. Or to make it easier for you, it's basically what consumers spends on a daily basis. Now, because inflation is so high, if you haven't lived under a rock, US inflation is sky high. The only way for the Feds to bring that down is to do what? Hike interest rates. This will discourage consumers to spend, bringing inflation down. But with the drop in the CPI data that we saw since November last year, it was dropping, and then this year it just went boom. So they were like, whoa. So inflation's actually not coming down. US consumers are still spending. They're not supposed to spend. They're supposed to be deeper in debt because the interest rates were hiked, which impacts their home bonds, car bonds, loans, anything that's got interest attached to it, which puts stress on the consumer to have less money left to spend on companies that are listed on the stock market or wherever the case is. This brings the consumer spending index down, which brings inflation down, because the consumer spending will now become consumer spending less. Okay, hope you follow. Now, first article from CNBC, stock futures are mixed Wednesday morning following a sell-off fueled by Powell's comments. There's it. That if you've been on this channel for years over years, you would know that was the case and that was going to happen. The market took a massive dump yesterday because Powell, he said, not because your mentor or the 20 signal groups that you follow on Telegram said this is a sell. No, it's not because of that. The market took a dump yesterday because Powell clearly stated that we can expect more aggressive interest rate hikes, which increase the price of the dollar index. And due to the negative correlation that the dollar has on precious metals, indices, and commodities, anything that traded against the dollar or that's priced in the dollar was then negatively impacted, and the price of the dollar increased because investors now expect a higher interest rate, meaning that they will get a higher return on their investment based off the interest rate. The only people that makes money through high interest rates are investors, is people with money. There's your boss and his boss and his boss. It's everyone that sits at the bottom of the food chain that doesn't make any money, because we are basically being put into more debt. And you know what the funniest thing about all of this is, right? When COVID hit 2 or 3 years ago, what happened was they reduced interest rates, right, to accommodate consumers. And now they're just increasing it past what it was back then, meaning that if your salary hasn't increased, then you have a problem. And not just you have a problem, but we know that the rate at which wage increase and the rate at which inflation is going up is not the same. You come to South Africa, you tell your boss, "Yeah, I understand, but I can't get to work, my friend. You're not paying." He's like, "Yeah, but you must work harder. I will get someone else to do the job for you." You know? So we are working ourselves to a point that in the US, people are probably going to struggle even more if they're going to continue with what it is. And Powell, that is what Powell said. Now, we're going to just read through the articles very quickly. It says here, Powell is being very, very clear. If you look at what happened over the past year and a half, the call on inflation didn't pan out. Okay? I says here, I think Powell is very much on board with the idea that he does not want to get caught flat-footed again, and so opening the door very wide for a 50 basis point hike was exactly what he said. Now, we went from a quarter basis point to a half a basis point to a 0.2 point. We went from a 0.75% basis point, then to a 0.50 basis point, then we went to a 0.25% basis point, and now we're going back up to a 0.50 basis point, which is exactly what the dollar needs to drive the prices to the moon for the dollar index. It says here, stock tumbles, hills climb on Fed rate hike fears. That's it. Every article you read, okay, brace for US stocks to crash again. The extreme valuations echo the 2022 bear market. Doesn't take Morgan Stanley strategists to say that. I will also tell you that as well. If the market continues, not the market, if the Federal Reserve continues with the way that things are going now, if the inflation doesn't drop, if the inflation is the key indicator, if the inflation does not come down, my friends, then I will have a minute of silence for all the people in the US, especially the lower class and the middle class, because then they will pay a hefty price for that. And if you live in South Africa, what makes it even worse, that means the price of the dollar increases. Now, think about it like this. The price of the dollar increased. Now, most stuff being imported is priced in dollars to South Africa, and that means that the rand will weaken against the dollar, meaning that we will start paying more money on certain things there as well. Like we don't have a problem already. Yesterday I had 6 hours of load shedding, and I'm thinking I must leave this country. But if you listen to the news, you'll see there's actually more people who's got even more problems. So, okay, let's just jump straight into it here as well. Now, it says here, a measure of greenback strength extended its recent daily to the nearest highest level this year. The yen extended its decline. Powell, who will appear again today, has said that in a testimony on Tuesday that they are already speeding up the pace of tightening and taking rates to a higher level if inflation remains hot. Now, you measure that by looking at that report that's coming out Tuesday. Now, if this data comes through higher than it did the last month over month and year over year, then I'm taking all the money that I have and I'm going to invest it in the dollar index. Now, that's not financial advice. I'm not saying you have to go and do it. because I don't need people pointing fingers at me there as well. Now let's go to the data that we have here, right? Now I'm just going to go straight down to the daily time frame, right? We know the dollar is bullish, and we're going to look at the next extended point, because this point that we are at now was covered already. Now the first thing that we can see over here is, like I said, is that the dollar has printed what's known as an overextended W formation. After that, you expect a pullback to the left leg and then a continuation to the upside. Now what we have over here is a massive impulse. After an impulse, you expect a correction, and if you take your Fibonacci from the high to the low, what we do have here is we got the confluence of the 0.382 that's lining up perfectly with that left leg. I do expect a deeper retracement for the market before continuing the next impulse leg to the upside, and based on what my eye is telling me, I do expect a pullback, and then that would be the next level or the next stop for the index as we move along. Keeping that in mind, because we expect a correction on the index and everything else that we are going to look at is negatively correlated with the index, we obviously expect some bullish momentum, also known as a correction on these indices. So that's all we're going to look out for, is what we have over here on the Nasdaq. So the Nasdaq just hit the level of support. I'm sorry about that. So this market broke above this level of resistance, came back, tested it as support. You can see here we have this overextended W formation here. I do expect a short-term correction on the Nasdaq, potentially for the market to come and hit this level over here, there, and then from there we could see the market continue lower. We could see some better structure on the 4-hour, for instance. Yeah, so I'd probably go somewhere there. So that's why that's why I see the Nasdaq correct itself again today. Now you might want to go and reevaluate the situation before you just go in there, because I think a lot of people, they don't understand what a market breakdown is. This is not a signal, this is a breakdown. This is an analysis. This is an indication of where I think the market's going to go. It's your job to apply what you know, and I would believe you do know something, because if you don't know anything, then you're in the wrong place. So make sure that you get the knowledge there first. Here we have a massive red candle. The Dow Jones was wiped out yesterday. Even the Dow Jones like, why are you always going after me? But we got the same pattern here, impulse. We got that correction. We're going to look for a structure on the 4-hour. This is a nice, beautiful red candle. So imagine if you sold, then boom, you'd have made a lot of money. You know, we've been very happy and very sad also. Now what we have over here is we got this structure, right? This level over here. We have to go on the 4-hour, because we need to identify structure, and that's unfortunately how the market works. Here we have resistance, broke above resistance, tested it as support, broke above support, came back, tested again as support. Support did not hold. All of that supports now once again turned resistance. Now again, I do expect the market to pull back to that level as I identified, and you can see it's actually a structural level on the daily. Yeah, as well, that was resistance, support, resistance. Once again, I do expect a pullback, and this is just profit taking from the biggest institutions in the market before we continue this move to the downside. Again, please don't just go there and buy. Okay, don't go there, buy, and then send me a message, must I hold? No, please don't don't do that. I don't say go buy there. I'm saying that there's an opportunity to pull back. You have to apply the rules of the strategy that you paid Clint and all those people for, right? Don't come and say no, because there's a lot of people out there who's defending that guy. I don't, so if you want to defend that guy, by all means, go ahead and do it. Any case, we've got gold here, some similar price action, pullback expected, no questions here as well. Excuse me. So I do expect a correction here as well. We have a massive impulse. So after an impulse, you obviously expect a correction, and they're perfectly a 0.382 pullback. Euro USD. So Euro USD, you can see as just reach a level of support, obviously a equal low, aka double bottom. I told you guys it's a sell, because the thing is, the problem with saying I told you guys it was gonna be a sell It is misleading people by making them think that you have sufficient information to say that it is. Do you know how many times I'm right? Do you know how many times I'm right in my signals group, my signals chat that's gonna run out? Do you know how many times I'm right? But I will never come out and say, I told you guys it was a buy. No, I collect information. It's called confluences. So I collect the information, and then once I have enough information, I make a trading decision. I don't draw 20 trend lines and 20, no, I watch, I look at news events, and I know a lot of people, they don't like to go through the hassle. They don't want to go through all of that because it's too much effort, right? Well, if you want to sit where I do and understand and know what I know, then the best thing to do is make sure that you are disciplined enough to gather as much information before making a trading decision. And the best thing that you can do for yourself is always evaluate yourself when you're having a difficult moment, because why a lot of people are struggling. And when I say struggling, I know a lot of people are struggling to make money. And the problem with that is, I've said this day after day. Now, most of you are probably in that free Telegram group, right? So for the past 2 weeks, I've made about 3 or 4 withdrawals, right? And I say this with a lot of the people in there just to encourage you guys, motivate you, to make you see that it is possible. But the problem that a lot of you guys have out there is that you will always look to the wrong people to accommodate you, and you'll always look for the wrong stuff. Stop going after that skill and start working on your discipline at the end of the day as well. I bet you, if you go on Instagram and you see someone with a GTR with a blue screen posted next to it, you'd probably be more excited because of that, right? Yet you don't know how much money I have. You don't know what kind of car I have. You don't know anything about my life. All you know is that I'm flipping good at what I do. You understand? And that is how you measure a person that you want to invest into. I'm not saying invest in me because I'm not selling anything. What I'm saying is that invest in the person. When you invest in a mentor, and I'm not, I don't do mentorships anymore. But if you do decide to go for a mentorship, go and invest in the person. Don't tell your wife, I saw this guy's got a nice car, I also want a nice car. Don't brag. You don't brag even. Come brag here. Oh, did you see that guy's car? Yes, I saw it. It's your money. It's a lot of people's, a collective, a lot of people's money. So I'm going to leave you guys with that. I'm going to say thank you for your time. And as always, like they say, before you invest into anything, make sure that you invest in the knowledge to understand it first. That's all from my side. Thank you for your time. And as always, cheers for ears.